Hey there guys, Shingai here again with another update on portfolio performance over the past week. On a relatively risk-on week, we've seen some recovery there in the equity markets after some angst that we saw over the past fortnight or so coming from the financial sector in America and some contagion effect spilling over into European equity markets as well. That would see performance for the week. 10 out of 10 of the CBAM portfolios outperformed their respective benchmarks with returns ranging from 0.71% for CBAM 5 down to 0.36% in CBAM 1v2. In terms of recovery trade, we also saw that Chinese tech rally on the back of news that Alibaba Inc. would be sort of going through an overhaul and settling into 6 different business units as a nod to the Chinese tech industry, and we see some strong recovery for our Chinese equity positions through Bailey Gifford China up 3.06%, HSBC MSCI China up 2.88%, and then some trades coming in on yields capitulating or tapering, and that would see that yield sensitive position with Hypnosis Songs Trust also up 2.4% on the week. In terms of detractors from performance, we did see a pullback from JP Morgan US equity income down 1.45% on the back of that heavier allocation towards financials, which has had a tough sort of fortnight period in terms of equity trading in the United States, with concerns especially coming from regional banks as well. We also saw headwinds for Man GLG high yield opportunities down 1.1% on a 1 week basis, and also equity Indian subcontinent, the topic we've been discussing over the past couple of weeks, with growth concerns persisting and that sticky inflation in India being a narrative. And that would see equity down 1.03%. But switching over to a quarter to date basis, 2 out of 10 of the CBAM portfolios outperformed their respective benchmarks, with again that defensive CBAM 1v2 up 1.77%, down to CBAM 5 up 0.88%. And then we continue to see that narrative of European equities recovering after a sharp derating in 2022, as we've been highlighting the past couple of weeks. And that would see our European positions through Allianz and Bailey Gifford up more than 5% on a quarter-to-date basis, alongside Pictet Clean Energy up 8.79% as well. Speaking of detractors, again we see JP Morgan and Equity Indian appearing on the basis of the higher financial allocation in JPM, and also that concerns around the growth of the Indian economy and persistent inflation again for equity, both positions down more than 7% on a quarter-to-date basis. What we have seen this week, we did obviously last week see a lot of central bank action with interest rate hikes, but this week we got quite an interesting set of data which has been encouraging for equity markets, with GDP in the United States coming in at 2% year on year. Jobless claims beginning to increase somewhat, up 198,000 on the month. Also European CPI beginning to cool off a bit, and then unemployment remaining relatively stagnant in the EU, but interestingly GDP improving in the United Kingdom, and Chinese PMI pointing upwards as well, so which has ended up quite a nice risk on week for the equity markets.